Hey everybody, let's get to it today. A lot to get into. Give it a couple of seconds for everyone to load in. And of course, we're going to look at a couple of the big things. Major markets starting to get some patterns. Also, crypto, what to do. It happened really fast. What can I say? I think we have to talk about the Bitcoin thing. That 42,000 test. Absolutely, as I was saying on Thursday, that was not what I wanted to see materialize, but it took shape fairly quickly, and the altcoins are just what's going on? Hold on one second. Looking good. Okay, that's better, and then let's see how the other one is. Couple more minutes here. Everyone's in. What's going on? I know a bunch of you folks sent me an email. Happy to communicate, hear from you. We gave a bunch of books away on Monday and last session, Thursday. So I'll hold off on that. I think I've exhausted those books. We'll probably do that. I'll do a special thing once a month or something. I think it takes up too much time, but that was fun. And some people have received their books internationally really quick on the books. I just wanted to say that the folks that want it internationally, yeah, it cost me a couple bucks to actually ship it to you. In some cases $30, and I'm willing to spend that so people can get that. It's kind of part of the giveaway. But if it doesn't get there, and I know a lot of places aren't getting there. I talked about it. If it's not there in 6 weeks, it's not getting there. So just I can't ensure delivery on these, but I'll do my best. And folks that are, if you really want a tracking number, international, let me know. Okay, let's get into it. Howdy, everybody. What's up, Scotty? Appreciate it. Everyone else, Ziggy, David, Stephanie S. Yo, we need to talk. You got to call me. We'll talk after this, okay? Thank you. So, the market's rolling over, coming off of the top. What happened to the blow off? Here's Nasdaq really quick. We're working with Harmonic pattern collection. And before I even get a second further, let's do some risk disclaiming. Okay, I'm claiming lots of risk. I'm claiming that this is entertainment for your, hopefully that you find educational. Okay, we've done that. I'll talk more about that later in the week. So, really quick, Nasdaq's coming off of that big move, big top at essentially that 16.5. Folks, we're just going 1618 to 1618. And until we get down to that 1618, this was, right here, 1618. We were looking for the reaction. Okay, came down. But no confirmation this thing's still sailing down. So I would target this NQ move, trading currently 15,688. And I think there's a lot of relevance between current stock market and what we're seeing in crypto. I think we're talking, this is more overall asset, fear of asset allocation. So we're in a 1618. We're in a 1618 correction across the board in just about every market. We'll look at those in a second, but be mindful of the fact that this will be a sharp kind of rollover. And our amplified RSI, that's something we've been looking at here on the 4-hour time frame, has yet to break out. Check it out. We've been looking for this M formation pretty much to do some kind of breakout. Has, from here, nope, didn't do it. Actually came back down. Can we do it here? Maybe, but we have a lot of work to do. And I would suspect with such a beautiful deep crab coming down here, until we can make progress, folks, we're still going to be trying to negotiate that. There's really not a lot there until this stabilizes. You're talking a 4-hour chart. It would have to be another day or two, easily. So beyond that, I'm not really going to jump to any larger conclusions. Go to the daily time frame. Something that is interesting. Again, we're almost overstretched on our daily amplified as well. The last several times we have reached oversold amplified. It's been a relief rally, and again, this just looks like a big harmonic impulse wave down to a 1618, maybe a 2.0. I would target as low as 15K, folks, for this overall resolution. Really quick, let me bring up the HSI indicator. This is Harmonic Strength Index. I've received a lot of great feedback in the past week or two. People learning a lot, and I will, in a minute, kind of do my 30-second overview of really how to get started. The key thing is, folks, if you don't have your hands on the software for harmonic pattern collection, by all means, this is it. This is going to be the fastest way you learn to really be applying the framework, the theory, into real strategies. Okay, an actionable trading plan. that gives you the skills to make the analysis, to read really what the price action and the trends are telling us lately. And a lot of people, please look at the Thursday session, and I'm going to get to Bitcoin in a second, but there was a lot of things we saw in Bitcoin which were troubling. Again, it materialized a lot faster than I thought, but here we are with NQ. Same situation, folks. There's a lot of bleeding going on, and we see in this price action, and overlay that with the clear structure. We know that this is likely in a pretty sharp 1618, and even off the last prior low from the October low. Okay, you're probably looking to form a 618, 55, 50% B point down in this area. Be mindful that we're seeing that pattern, if you will, of those minimum 618, 1618s. Let me check. Let me come over here really quick. For today, still looking lower on all of this. Couple quick questions. What is the HOP? HOP is Harmonic Optimal Price Level, one of our proprietary metrics that we use with the zones. Why do we use HOP? HOP level helps us to determine what is the real world overspill. Why? Because the patterns are your standard metric. That's your minimum. I think it's something where people think that it's supposed to be, hit the top number, like hit the XA level, and then like right there, and then immediately go down, make a monster move. And as we've seen time and time again, that's not how we really assess these opportunities. What we're looking for are just the entire zone. Take your measurements, create the zone. Okay, assess what happens in that zone. Is it an M or W formation? That's the other thing. I'm going to jump over to Bitcoin here in a second, because the M's and W's been saving our butts. That's the truth. And we see how many crypto influencers are now looking at M and W structures. How many crypto influencers are quickly moving to 1618, 0.618 harmonic ratio measurements? Why? Because they only need to see it happen once or twice to realize this is a repetitive phenomenon. For us, here's NQ on a 133 tick as it's happening right now. Okay, your HOP level, harmonic optimal level, that's kind of the top end make or break. If you don't see reaction response at the HOP, pattern's going to fail, but it helps us to gauge that overspill. We're dealing with this in crypto at the moment. Okay, and we're going to look at why we're exceeding HOP levels that invalidate the scenario. That's a little bearish butterfly as an intraday trader. 133, 233 ticks, probably even better. But again, it's all about the framework. It's about what's happening in the zone after the pattern completes. I think I talked about this Thursday, where just kind of going through how the best opportunities are usually giving you this window, 3, 5, 10 bars maybe, for your entry down to, looking at our targets down to target 2. Go HOP to target 2, folks. This is one of our bread and butter opportunities that we look for in any of the patterns. We go HOP to target 2 and capture that segment. Again, we're going to look at crypto here in a second, but that's just NQ for today. Again, for today, we're now back to flat or a little bit up. What are we? Let's go really quick with NQ. I always like to come into the market, and any time of the day, what's last 5-minute HSI? We're flat now, or +3. Here's our last 5-minute HSIs. Actually, 2 of them up there at 15,780. It looks like this. There, that's the bottom indicator is harmonic strength index. Top indicator is amplified RSI. These are both proprietary with the software that are adaptations, evolutions of the standard relative strength index. I'll bring in RSI in a second, but just important to know, we're looking for indicator extremes at the proper price zones, harmonic zones. That's how we have confirmation. That's how we know when something has moved too far too fast. We could be at a 1618, but it could keep going and then trigger the confirmation, which is what we're seeing a lot in crypto. So right now, NQ, again, after the last couple of weeks, the bigger thing I wanted to kind of lay out here, just where the heck are these markets going? Just let's look for the termination of these big 1618 down moves off the top. Pretty close. There's your zone. And that 1618 is 15,358 to be exact. We're trading 15,715. It's a 4-hour chart, folks, so it's going to take some time. Really quick, S&P's not much different. And just to get an idea of what, why is it going? I thought the markets were supposed to go up during this time. I thought we were supposed to see Santa Claus rally, holiday move, and take a look at where we are on. Let's go with the daily quickly. We did have a couple of things on S&P. Actually, on the weekly, we had a big HSI signal. Let me pop that up, where we did think pause. There you go. Yeah, it was up in here. A little check back around 45.78, essentially where we are. That doesn't look nearly as bad as what it seems, right? It seems like the whole thing's going to come apart. Maybe just a pause in here. But down off the 1618, maybe go to the 4-hour time frame. The weekly, you can barely see it. But I will say this: you can obviously see this. That's a 1618 up to there. Go to a 618, come back. Reaction. Come back for the retest, the return move, and then if we were really going to get it, then we'd go like that. 1, 2. The 1618 move, folks, has proven itself. I personally think people are just kind of on it. They're getting it. The active traders, the investment banks, a lot of, I would think, algo geared money is just responding at the 1618 without hesitation and taking those chunks. Look, there it is. Up here at the 1618. I'll get back here. Where'd you go? There it is. There you go. 1618, basically 47.30. There really wasn't a crab pattern. It's just a 1618 hitting that type of reaction. But let's bring up our amplified. Okay, the top indicator is amplified RSI. Look, the red line stops right there, which is pretty interesting. That does speak of a divergence. You can't really tell because the RSI throughout the whole rally of the past year has just continued to hug that overbought line. And we talked about why that was strength. There really was nothing here until we just triggered that red line went off. What is that? Internally, by definition, that's actually an RSI band. That's the end of divergence. If you see that where the red line stops, we start looking for some kind of reaction. That's how we read it. It's not really not the greatest in terms of having other confirmation. There's certainly at that point there, you don't have any HSI linking up. And HSI is kind of trending down. I would think that we get a little bit lower on HSI, and we actually do have Okay, in development, it's tough to see it, but we do have a complex structure. This last formation is another M complex reading. And I got a lot of arrows here, but look, we didn't even hit the 50 line yet, right there. We need to hit the 50 line before that even goes on. So this is still in consolidation phase. Final arrow that I want to draw. Let me erase them all. And let's focus on this last point because it's really important. So something that, let me blow this up. This is your indicator window for amplified RSI. And we talked about complex structures last week. Take a look at the complex return webinar. But it is extremely important that that's an M formation. All right, I think we can all agree it's not the prettiest of M's, but that's an M. And that is different from these readings back here. This is a heck of a lot more constructive than these readings. And how we look for this is to come back down. All right, so we came out of the zone. We make the inflection, start going down. Get back over here. That's it. Okay. And we're looking for a minimum to the 50 level, but possibly down, come back all the way to retest that oversold, excuse me. Hold on one second, folks. Bring this back over. I need to check on you guys. Tesla is at the hop. No HSI yet. I actually have that on another computer, nerd herd. So this is what we want to anticipate to complete this consolidation phase. And looking essentially at this dotted line, and this is something else, I'm really trying to highlight these smaller markers and things that come on. What do they mean? You know, what I can show you folks what the M means up there, that M formation, or this M formation there. That's significant. But look, the dotted line goes on right there. So that dotted line tells you not only that you have a complex formation, but it's officially out. That's the official kind of starting point for the complex structure. Right there is the other one that on this current session, this current, weekly. So it started about 4 weeks ago. And we're looking for that to do the consolidation, but that dotted line is what tells you it's happening. So I'm going to favor that. We will likely get a red line to go on there, just like we did here. And that would start the beginning of the return, if you will. I mean, we're still looking for that red line to go on. And we're looking for either a full 50 or all the way back down to 30 before this can even be considered as a return. So we have some work to do. This is how we have to assess it, understand not a problem, there's still consolidation phase. But the indicator has some work to do. Ideally, if you want to get a buy signal, you want a Santa Claus rally, come on down. Would be the best thing you do, and then pivot out and go. That would be the best setup for everyone that wants to ride some kind of massive move. But I want to stick to harmonics. I really all of this has to fit within a pattern, and that's what we'll be lining up here on the major markets. Again, still lower. We see that want to just kind of watch this thing give us some formations here, and then set it up for a year-end move. Today's the 6th. Let's just get a little perspective, folks, because how many sessions? We're talking, including today, 5, 10, barely 20, you know, like 20, really 20 sessions, including today. So not a lot of time. All right, let's get over to crypto land. I'll go over to Harmonic pattern collection for TradingView now, and that's the place to go. Folks, if you're new here, welcome. Go over to harmonictrader.com, become a basic member, and get with our software. Here are the instructions. Again, a lot of people starting to take advantage of the Pro for MetaTrader and NinjaTrader. A lot of people are. People are asking about Sierra Chart. That's lesser known, but excellent, really stable charting platform. And ESignal is probably the most expensive because they make you pay for the data, but it's worth it. And you got the cash, and you're active trader. I really, we're working on ESignal, and they've got so many bells and whistles on top of what we have. It's just the complete platform, so check it out. Also available for Thinkorswim, and that's available with our partner Robert over at Harmonic, or Fun with ThinkScript. So check all of those out, please. But the big one for today is we're going to get back on TradingView, and you can get a free trial. The final, the other thing I do need to answer. So there was a lot of confusion last week. Really quick. So go over to the Harmonic Trader blog and click on one of the two offers. So the Cyber Monday deal that I talked about last Monday, that is for the Pro versions. So if you're going to buy the Ninja or ESignal, they're all the same. That full package is like a 3K package for two. You get 2 licenses for one price, which is great. And then you get gold membership. And if you want a book or whatever, I'll mail that to you. But the deal that we have with the Cyber Monday is that, okay, let's package it all together and throw in TradingView, because we're not going to be selling the owner's licenses anymore come January 1st. This would be the time to upgrade. And if you already have TradingView, folks, use the 20% off discount code to compensate. That will credit you for your TradingView purchase. And then the final piece, again, if you do the, here's the blog, and it's all on here. So the Black Friday special, that's if you just want TradingView, which is great, and you get gold membership, and I'll throw you a book if you want a book. But go there, get the Black Friday special, and that is the TradingView owner's license last chance plus a 10% discount. That's where to go and get with all of that. If you take the trial now, if you're new, and take the free trial, I'll still honor it till the end of the month. Definitely check that out, folks. Let's take a look at, really quick now, let's get to BTC and a couple others. Some of the ones that I featured on Friday, last Friday, last Thursday, because we've been on the Discord group too. If you are new as well, we just opened up a Discord at the beginning of November, and that can be accessed. Go to your basic members page, please. And I did realize, I mentioned this Thursday, that there's been, my website's been unbelievably slow. I think maybe made some progress. If it doesn't improve, I'm going to have to move to a different server. So if it's really slow, just be patient, please. But go to basic membership here, access your basic membership page, and go to Discord and join us on Discord. So my involvement's starting to increase more so on a daily basis there. And we'll still be on Twitter and stuff, but I think there's going to be a better chance for intimate kind of correspondence updates there. So check all of that out. It's all available on basic members page, and then after you go through that, upgrade. Okay, here's Bitcoin, folks, and let's get over to it. 49,000. A quick review from really what we discussed on Thursday. Okay, we had this big crab pattern. What troubles me about this is I thought we could come to the target one at 59 off of the crab, and this is not on every data feed. That's the other thing that's kind of upsets me is I just the data is off slightly where some of these guys got down to 42. These guys, they got to 41.9. Others got to 44. Pretty sloppy. But that would have to be your low. And that's the other thing about trying to establish the framework so that we have an idea of how far we can allow this before you have to throw in the towel. I think you're looking at the pretty much that line. You do not want to see that go below the low of 41.8 because that breaks down the whole structure. So this is the key to realize with Bitcoin, and has served us well. There have been a lot of shark formations over and over and over again. What's the shark? The shark is slightly different, M and W, although it has a lot of visually the same characteristics. It seems there are some nuances that are critical to be aware of, and also character. So we've talked about a few of these shark patterns where going back to the first move, okay? And let me just trace out what a shark looks like. It's not the M formation. It's where your A point is actually exceeded by the C, and then you get a full retest of X. Usually full. Minimum is the 886. I like to use the 1.0 as kind of the maximum tolerance. But your minimum is like this. It's your 886 and your 1618. So this B to C move, that has to be a 1618. Where do those line up? Well, 1618 is right about there. You at a 946 level. That's a pretty good number too, 946. Write that down, people. 946. 946 with an 886 is always good. It's a little tip. What is 946? 946 is the square root of the 886. It's interesting stuff. It does work. But for what we're really looking for is the somewhat of a deeper retest, very close or 1.0 to the XA. That's what happened back in May. And we look at the live streams from, I guess it was end of July or mid-July. We got some signals. And they look like this. Oh, let me change my layout. I'm on the wrong layout. I don't have all my indicators loaded. Don't know why. 946, 94.6% retracement. It's a really effective layering method with the 886. I talked about layering before. Go back to BC. I got to load all my indicators. I didn't have all the indicator patterns here. So let's trace it out again. Go back to our 4-hour, or I guess daily. For the year, we've been back and forth, shark to shark to shark. And we can do this now. We have a shark formation at the moment. So henceforth, we're calling it shark to flow. But let's go back here and just trace out our sharks. So we can recognize these 1618s when they develop and how to know, okay, when this thing's going to fall through like a knife, or we're just dealing with a steep, sharp correction. So again, let's go back there. That's basically your shark. That was the low in June. Trace it back again. Now we do have another. It's like this. Down here, it's not the nicest. And I've mentioned that kind of real shallow shark. But another kind of 886 creature. Shark creature. It starts to stretch out from some of the the real maximum ratios we want to use, but you're seeing these structures as much as M's and W's that are kind of inside the M's and W's. But they help to give us the make or breaks. That's why we will always want to have a manual understanding. You definitely want to learn about the M's and W's and the sharks. Okay, because when you're able to identify those manually, then you can, like a puzzle, you're putting together what are the possibilities. Because if they don't fit in those possibilities, then you have to say something else is going on. And if it's something else is going on, it's not what you think, well, then you better be positioned accordingly, or you're going to get, you know what, handed to you. So currently, what happened was it was something I traced out on Thursday. Did I know it was going to happen 24 hours later? No. But this is how we are able to at least to deduce the possibility. And it was like this. We were here, we were there, we failed to break out, and then swoosh, down 886. It's like almost the exact low. 886 was 43.5. So please, let's be aware of that. And again, our normal reactions from these kind of sharks. Shark goes to a 5-0, so come back down. Now we should see a counter-reactive immediate move, 55.3. 55.3, that's the reaction mechanism after the shark. No matter what, I don't care. We're 49.2, great. You had a bunch of whales swimming deep at the 886. Maybe they know. Maybe people are doing enough statistical research that they're finally figuring out what are the major ratios where they can gauge support resistance, because how are you going to do financials, fundamental analysis on any of this? It's a good project. It's going to serve this and it's going to be that in 4 years. Folks, I'm a little bit older than most people. Everyone's talking about 2030. Folks, I don't have 2030. Okay, I don't want to. I'm not going to be hodling to 2030, and we see why. I've been saying, trade this market, don't hodl. Trade it. Why? Because we're getting so many pulls, huge moves, rug pulls. I've talked about some of my trials and tribulations of things not capturing these massive moves on huge positions. And then they do the parabolic flip and then come back down to life. That's a problem. I talked about why that's a problem with the alts. Okay, Bitcoin's going to be a slower creature. I don't care. It's still going to respect harmonics. This will turn into a 5-0. You get a B point. Come back down for the retest. And then what? Bang here and then another bat? Because from a standard technical perspective, you're looking for if you're looking for this thing to roll over, you need to see lower highs, lower lows get established. Within that, let's absolutely measure our swings. And what are we seeing is a lot of these sharks. These shark 1618 to 886 massive pivot points. Look, we just come back to retest the low of October. In the same regard that we went back, and we just bring up that, looking at what happened in September, at the September low. Okay, yeah, you're there. You have a bit of a shark creature. Why? There's your initial low. Secondary low takes it out nominally. That's the character of a shark as well. You could say, oh, well, a lot of structures take out their prior low. Well, with the shark, this A, B, C creature goes to really like a 113, but really can't exceed a 1618. That also helps to define the shark. Sets you up, and then you're looking for impulse move to 886. Like that. Shark, shark, shark. By definition, if you can trace it out, it fits the definition. Well, unless you see fireworks at your D points where it gets annihilated on type 1, you have to be considering this a part of the stair-stepping process of crypto. Extreme stair step, where you make a surge and then you come back. You go to an 886 and then you got to come back to a 382 minimum, maybe a 618. And I think for a lot of people, we've been here for a while, folks. It's been a great year. I think everyone needs to take a minute and take stock of where were you a year ago? Where was everybody a year ago personally in your trading journey, your knowledge journey, your financial journey? Where are you now? Are you on a better track? Where are you looking for the next year? You know, are we going to be dynamic in our thinking, or are we just going to kind of stay in the same mindset and just try to hope that things copy the past? Because that's what I see a lot of. I see a lot of the stock to flow guys, the influencers, who are absolutely certain this is the 2017 shakeout before the 400% move. Well, let's go to some reality. Let's go to some facts. Facts are really quick on Bitcoin because this is facts on Bitcoin. And Bitcoin is 50% of the total, almost 50% of the total crypto market cap. What happens in Bitcoin matters. So that weekly basis on crypto, this is in a different spot than you go to maybe the 80 of the top 100 alts. This is a different chart. Okay, so if Bitcoin is not going to break out and have problems here or need more time for consolidation, well, it's because there's something that preceded this. And so if Bitcoin is going to stall at what is this? This is a failed harmonic impulse wave now. You didn't get above a 113. And I'm going to pop up the book and show you this, where this comes from. What are the possibilities on that? Well, always consider a minimum. If a definition of a harmonic reaction, folks, is to a 382 move. 38.2% is what separates a harmonic leg from one to another. If it's, we get under a 382, we start fudging. In an alternate bat, your B point may be below a 382, but, again, not as clean of a structure. But if we're here and we can recognize that major move, well, we're not 382. A 382 reaction which is a nothing, a really just kind of a normal functioning part of the market. Now that's 53, 54,000. But we managed to already slip down to 43,000, which was, look, 618 off that last move. That's why that's so important. What are the possibilities? Well, I just want everyone to know that, look, I'm a believer in the 886. And I'm gonna pop up the book here in a second. I'm gonna do a little book review of where you can get all this information. But I'm thinking it's something like, that if everyone seems to know also with a great degree of certainty that crypto markets like to do an 85% or 80% correction, I think that's something else a lot of people have in the back of their mind. And I just to point that out, if just always be mindful. Bitcoin's like all-time 886 is basically, I'm not saying you can get there. It's about 4,000, 3,000. I don't think it's you have the same kind of players. You got much stronger hands. You got people that are going to go to the grave with Bitcoin. All right, so let's be aware of that. What I'm really trying to argue here is that this is more the fact that we're responding from this, a point of consolidation where you're just going to need more time. Everyone's looking to jump on the moon, and it's not happening yet. So now, okay, we get a delayed cycle. All right, even if you got a delayed cycle and then this becomes your really clear range, your 886 off this swing low puts you, again, 30. And that could be a very easy static range for a little while. And again, this is just, let's be really clear about levels. Let's be clear. I'm a huge believer that everyone should master technical analysis, the basics, the methods, the understanding support resistance. Because really, what is support resistance? It's supply demand. Demand shows you that you do not have great demand above 60,000 to follow through, despite what the narrative was screaming. So come on back. Come on back down, and let's get it out of the way, and let's come back down and do the swing retest. That's for me. I feel more realistic kind of acceptance of what has kind of unfolded with this recent breakdown. And then the final piece on this crypto breakdown that has served us incredibly well, and I'm talking since really July, August, or even more so. It's been the assumption that what would happen is the final move, capitulation move, would be a 1618, some kind of massive divergence up to 87,000, like that. And crab structure would get us there. But I'm not going to be able to say that anymore once your C point is violated. So there you go. Shark to flow, all of that you want to see. I do think it's going to be a battle. You're going to see a battle at this 886 at 42. But underneath that C point, what happens here? C point becomes failed, crab fails, 1618 fails. Then you just look at what happened at the 113. What happened here at 68 that was so weak that we couldn't take out prior readings? I'm not there yet because I just think this is volatile crypto slosh, if you will, and I mentioned this last time, huge over leverage up here on the attempted breakout. The big thing that I will be looking for into tomorrow, folks, the next couple of days, how are we going to act down here? We are oversold clearly, and we're hitting levels, but we have to pivot out immediately. All right, we would need to see, and I would think that this Bitcoin response to the 886 and the shark would have to be really sharp to get us back up to just trace another 618 move. Again, that's 53, 54 in a reactive move. But we're not coming out of the zone yet. This is how we want to really break it down. Here's HSI, our bottom indicator. Let me blow this up. All right. Deeply oversold. And we typically don't want to see that. Okay, I really don't want to see that come back down. I would have preferred that thing to have initiated. Again, we were at 56.5. We had some patterns we were dealing with, and again, look at those sessions. I was really concerned under 56, and the fact that we did a straight flush to 42 tells me that there's not a lot of real defense. There's not a lot of strength. That if they can really push them out like that, and know that this 1618 level, all right, right off the top, that's it. That's your max point right there. If this is just a temporary flush out reaction, you need to hold that 1618. That's, I don't want to see this thing under 47. I don't even want to see it where it is now. Okay, and so for me, we are back at where we were in July with a really ugly strike against the uptrend. now violating the number one model that everyone has probably made their fortune on. Good for them. Now we need to navigate these metrics. I really think we have to be able to take it like that, and be realistic. And I've been saying this for several weeks now. The unsustainable nature of a lot of these altcoins. Let's go to the biggest one, Ethereum. I have to say I'm impressed where Ethereum is, but it doesn't mean it's going to stay there. Again, I want to highlight a couple of critical measurements we talked about earlier. But the one thing you need to consider, the longer this stuff does not rally or continues to go lower, the stronger all of the metrics that preceded this become. What does that mean? Well, as I said, I started today. It's been a hell of a year. It's been an amazing year. Met a lot of great people. I really, I'm coming out at the end of this year in so many ways, and despite all the craziness going, met so many fantastic people, made a lot of friends, made a lot of money. I learned a lot. Really enjoying this time. And I want to continue to enjoy it. I want to continue to make things fun. But I think things don't get fun for me when I step outside of my harmonic framework and start just being complacent. I've talked about complacency before. Not responding to levels and signs that I need to respond to do what I do. So this is something where, again, I look at Ethereum and I feel like, okay, that's crypto on face. Feels like that's probably the next Bitcoin, even from a store of value. All of the right reasons people would be talking about. But what's the right price? And what's the right harmonic position within the harmonic framework? And Ethereum, we talked about this last week, coming off of this 1618 extension from basically the end of that summer fall correction. Now we're at a 1618, and let's break it down. This wasn't a crab pattern or anything up here. I will show you what patterns were up here. There was a number of back-to-back, but even from a 1618, and it's I think people that are learning how to measure manually, this is a great example of why we expect first reaction, come back for the retest, which we did. Oh, dang, this mouse is... What the heck's wrong with this mouse? Mess all over the place. And now reversal. And we take that down. So strong reversal. I mean, that was 3,600. Some traded 35. But again, trade being the most important word here, that I just feel like this would be a great trade, but nothing else. We have this green arrow on the daily. That's HSI. That's our harmonic strength index. Oh, you see how all of this is starting to lay in here, where you're trying to put a floor, absolutely trying to consolidate at this higher level and trigger the breakout, but it's not happening. I think it's not happening because Bitcoin and the rest of them are doing something completely different. This might be, as it was in 2017, the last one to go. This is absolutely sitting at a point where type 2, target 2 minimums with our daily failing to break out and take this higher. The bigger thing also to be aware of, look, HSI and our amplified readings are not responding after hitting some overbought readings. Here's the first top back in September, and take a look at what happens on amplified. Okay, we have a complex structure, comes on down, red line goes on, red line goes on. Well, check it out. This is on the daily, folks. Okay, your red line stopped right there. We start looking to the right. Now we have another red line. This time it links up with the 1618. This line, that red line right there. Those are all signs of, for now, at a minimum, that's an overextended, overbought move that has to relieve the pressure and at least give us, let's look at the now on the amplified reading on the downside. And you can do this with standard relative strength, folks. It has just been that my experience with what all the research that we've done, this is a heck of a lot more responsive. This amplified reading gives us more signals and really more relative to the actionable points. So in the same way that we were looking for this green line to stop there, now we're in this down phase. We could say it's a type 2 reversal. We need to come down and finish it off. Ethereum has to come down lower and trigger that secondary test. Green line has to stop, which means we need to get an oversold test. Still lower. That's on a daily chart. Here's the thing that bothers me on the weekly, folks. This is huge. I'm glad that we spent the last week, 2 weeks, talking about complex indicator structures. I think that is the best way to go because it absolutely is shows us the early signals first. So here's Ethereum weekly chart. And this one as well, we were tracing out a deep crab. And still are. This is still the dominant structure where we go up to basically 1618. That has been the plan all along. What, 58,66,000. That's fine right there. But I will now bring up the stop and say on this whole scenario where C point has to hold, folks. You cannot break the integrity of this W formation. So just to know, if you're concerned that this whole 1618 advance is going to fail, it's going to be there. And I will even say, go a bit further and say, look, these smaller waves are going up and come back down. A to C here, that's about a 50%. This last wave here, A to B, X to A, sorry, and your B point move already came down. It was over 50% retracement of the rally from September. I'm going to say this. If you get under a 618 of that last 2-month retracement, basically under 3,500, I'd be concerned. I would increase my concern because Ethereum, like Solana and a few others, are the last ones holding. So that's how it's shaping up. This is also another shark. And again, I feel like if you have a shark formation, we can't ignore what the reactive possibilities can be. And it was one of the reasons why I was thinking that, okay, against these Bitcoin and Ethereum, might hit some bumpy reactive behavior. Here's, we can draw the shark on Ethereum like this. All right, up to basically the 1.0. And then some kind of, all right, maybe like a 5.0. Then we go back down. It's ugly. It's not a pretty sign, but your 5.0 level, again, gets you to 31, 3,200. I mean, this kind of more consolidation in this area is possible. Why? Because we did not break out, folks. We couldn't even break out of this prior high. All right, that is something where we want to watch it, and every day this does not continue. We can't get above prior highs. We can't get above prior 3-day ranges, and you find yourself dipping down like under 3,900. You have just so many things here where the longer this goes sideways, the more likely it will arc down. Absolutely. Yes, Mr. Ray. We have Mitch Ray in the audience saying absolutely. The 886 and 113 were both well respected. I'm going to get Mitch. I got him to commit. He and I are going to do something on this podcast, right, man? Let's do that. Let's get it maybe this week or early next week. You and I need to do another stream. But absolutely. A lot of these are, those measurements, what they're doing is they're showing us why we're getting these crazy reactive 1618 flushes. They're not easy to execute either, folks. They're just not. It's a tough one to execute. And again, I woke up in the middle of the night and I saw that Bitcoin was down. I was like, God, it's ugly, ugly, ugliness. Here's something that we were talking about last week. And I'm going to start to wrap it up here with this one. Gitcoin. Okay, and I talked about this. This was actually Mitch. Nick was the one who told me about this. Your buddy Nick. He was like, yeah, keep your eye on Gitcoin. Well, I kept on watching this since it came on Coinbase. And I was like, yeah, it's not, I don't see anything. I don't have any patterns. And of course I was kicking myself because I watch this stuff all the time, man. I'm 24/7 with the markets. And when I saw that, I was like, okay, I hope he caught that. I didn't catch it. I'm not going to chase that. And when we talked about this, it was last week at 13 before it went to 28. And that was for me, I was laughing. But I kind of knew, too, that inevitably this was a pump dump, come on all the way back. This is the other thing that bothers me, folks. That's not a sign of a sustainable market. That's not a sign of strong hands. That's not diamond hands. As absolutely, that's speculation. And I've been saying that this is all speculation, and we are late in a speculation phase. There's some of the stuff that have made progress. The wrap up one or two more of the Solanas of the world. How great was that? Okay, 20 to 240. Since there's 20. 20 was June 20th. Remember that? The summer solstice was the crypto low. So what? Maybe we make another low winter solstice? I really feel like, people are trying to grab lunar cycles, seasonal cycles. Some of it works. I mentioned this earlier, a month or two ago, about a guy named Chris Carolyn. I had the opportunity to talk to Chris. I met him, it was 20 years ago, I think, and we talked. He does moon cycles, lunar cycles. Check him out. Interesting stuff on the S&P. Statistically, he proved it worked. Chris Carolyn. I think I'll have to find his book. But really, for us, and what I believe is all in the measurements. So here's Solana, right? Everyone talking about the major pullback. Can't believe it. I could buy it at 175 or 180. I'm not buying it. I'm not buying. We need some more signals. I need to see some more patterns here. And I don't. Solana, if you go maybe 4-hour or hourly time frame. Let's bring this up. I think the hourly had some stuff. But that's it. Just trade it. Here's the hourly. Yeah, hourly is hop level, a crab off the top at 195, but ugly. And actually, this is a good one to look at because look at how it reacts. Perfect. There's your hop. There's HSI. It goes up. and then starts to go sideways. You see these reactions go sideways, folks, you got to scalp. You got to take it out because it should be doing a demonstrative move to target one. And if it doesn't, and it kind of bleeds out more than 30 bars, you got to move on. The other one that I mentioned on Twitter recently that was back down there hitting some stuff that look, I want to keep my eyes open. I really do want to look for opportunities. Here's polka dot, a little ABCD on the hourly that just completed, but that probably needs a retest. Look, it's like this. Maybe tomorrow we might get this. Here's an hourly on polka dot. Just again a little ABCD, but that's your reaction. That's it. Maybe as high as 28. But the larger structural foundation would not come until you get a retest. And you go to the 4-hour, look at what, Dot's done. Dot has lost 50% off the high in a very short period of time. And like a lot of these, they're all coming back doing big 886 retests. That's why where we are right now has to be the low. I mean, you go to October, you got another little shark kind of formation here down to 886, 1618. That's around 28, 2750. All the reason why, okay, if you're going to correct, and this is just a short-term correction, this shark formation has to be it. If Polkadot finds itself trading 23, 22, 21, anything, I would be done. Because you're going to respect. Because now let's get to the larger realities at hand on stuff like Polkadot structurally. All right, that we could not. How many of these have failed to break out above their April peaks? Most of them. How many got to the 886 and went down? Most of them. Absolutely want to. That's standard technical analysis. You could call that a double top. You can call that a failed 113. Whatever it is, the bottom line, folks, is that you're going to need to see major development. I need to see some confirmation. I need to see some stabilization down here. Okay, I'm going to trace out a couple things because you have sharks all over the place on here. And again, I'll trace it out. And this is Polkadot. You have your X to A to B. Also, really quick thing about the shark. Look how reactive these moves are in the nature of its development. That is something, it's a subtle difference, but you see that in the shark where it just is really kind of linear segment to segment once they really set it up. So that gives you your 5-0. What this should be, that shark should go to a 5-0, which is here, 31. And if it is a 5-0, it really should not exceed the 618, which is where you are right now. Again, you would want to see that. If that was just a regular shark, it would be something like has to stop at this 618 and then come back for one more retest. That's why where we are right now, everything that you see, if we don't stabilize for 2 or 3 more days, I'm going to be very concerned. I'll be very concerned, and we'll see that. And last one is total crypto cap. So the total crypto, are they running for the fences? Are running for the exits? What's this? Because the same thing with the Bitcoin situation of having the crab pattern. I mean, I would have loved to have seen a 1618. This thing go up and do our beautiful crab pattern. In this instance, actually, it was a deep crab that we are been projecting up to the 1618. minimum move up to 3.4. But what's going on? Are we invalidating the integrity of this crab pattern? If we don't get off of this floor and we come a little bit lower, I would be concerned. Why? We run the risk of essentially losing the W formation. And when you go your C point, okay, the other thing about a crab pattern, folks, is that the time from A to B, all right, should be actually longer, where the C to D move could be, in terms of time duration, A to B should take more time. C to D should be pretty strong, aggressive. Go up to the 1618 in equivalent amount of time or less. So if A to B, 21st of June, go to the 4th of September, not even 2 months. This segment should happen in about 2 months, and we are, 3 months or more? Going into 3 months and going down, going in the wrong direction after a long period of time. And if that's the case, then, well, all right, what's the formation I can draw? What can I draw from here? If this is going to fail and we're going to take out the C point, well, let's get some perspective. All these guys that say, when in doubt, zoom out. Well, let's zoom out, folks. Let's zoom out. And I'm going to finish it up with total crypto. Another shark. Shark to flow lives. Right? Like that. Down to an 886 minimum. 1618. Look at that. Am I crazy? Yeah, I'm crazy. But that's why I'm still trading the markets for a living, when a lot of people I know are long gone. I have to at least entertain this possibility. And it takes you back to basically an 886 off the July low. It's not the stock to flow, folks. So let's just do the measurements of what the possibilities are. If this does not hold right here, all right, and we continue the slide, we go and do another shark to the 886. It's not easy. Folks, I mean, come on. Last one, crypto.com. And I shared this, was a huge winner for me. And I took a chunk of profits. I mean, right at the top. It was awesome. Okay, I was clearing out at 96, 97 cents. I documented all that on Twitter. We started our journey on that at 34. There was a pattern. Go look at my Twitter feed. All right, and I still said I was holding a bunch. I sold out about 50%, even though I was expecting a 382 pullback. But as we got down here and we started to roll over again, I dumped out of the rest. And I got out probably the last 20% at 61 cents. I'm not happy about that. I don't consider that totally efficient trading. It's been a problem I personally have been having. And I had hundreds of thousands of shares, folks. Okay, so what am I thinking? Why not just jump out at your number? Well, because things were rocking. How many of the ones that I watched, they go 2, 3x more? So personally, I got caught up. I got caught up thinking, okay, hey, crypto.com's running, and stock to flow is going to really rock and roll. Wow, well, crypto.com could go to 140. Yeah, I got smacked. That's right. But it happens. It happens. That's what I'm trying to impart. The structures, the measurements are showing us sharks left and right. We have to trust those. If we don't trust the framework, folks, get your coins out and start flipping. Or let's get the dice and start rolling. And that should be a whole nother show. The crap system. But and I'll show you how that works. But I'm saying and sharing, okay, some of my mistakes, I got to respond better. And I created the software. And so, I mean, and it's not easy. Again, this stuff, that looked really tricky, but quite frankly, there was a lot of time in that crypto.com when it was up there in the 90s. You're talking hours up there. And then it starts to roll over and starts to kind of like flounder. And that's okay if you don't catch it perfectly. That's not the job. The job is to catch the chunks. For me, I try to go be too perfect on that, and then say, all right, I'll hold in. I'm going to sell half at least. And thank God I did. And I was able to get out the rest, but I gave up a huge chunk. That's kind of why I was saying the things I was last week about being responsive. Some of the things, and I caught it. I had that happen to me in SHIB, happened to me in Chili's, where they went up, skyrocketed, came right back down, and had to grind me out. Now I'll look for another entry, but we don't have any patterns. That's the thing. For me, folks, I want to see patterns. I want to see big patterns, and I'm going to leave everyone with this. All right, when things got nasty way back when, and we got into a bear market, and it was just down, 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 okay, it didn't seem like it would ever end. And I think something like, okay, here's 2017. Went all the way up, went crazy, started rolling over, working its way down. And then we got massive weekly patterns. I really feel like, by definition, okay, and this is Ethereum, and this has got all of the strengths, and it's the number one blockchain for everything. That would be if I was looking at like Yahoo. This is 1998, and I'm comparing internet companies. Ethereum, you would say, is like the Microsoft or the Google. Bitcoin's the Microsoft. But no matter what, they have a limit. And Ethereum, we're at a point where you essentially, for Ethereum, I'm going to put this up. We want make or break levels under 3,600. Oh, okay. I think that's it. Let me take a look. I don't know. Yeah, Netscape is dead. I don't know, folks. That wasn't me. That was probably maybe I said the C word too much. But let's see what happens. Look, plenty of time. I would say with Bitcoin down here, I wouldn't be surprised to see a reaction back up, to the 53,000 level, but not much more than that. And we'll come back to this tomorrow, and we'll see how this shapes up. But I'm just exercising extreme caution. The thing that we might see tomorrow would be the best, is to get HSI and some of these indicators to pop out. Then you could say, all right, reaction time, at least a minimum counter reaction for now. But you are scratching a lot of levels that you're running out of time and tolerance. So we'll look at that more tomorrow. Listen, I'll go to crude oil. I'll look at some of those other markets, the oil, natural gas, what's going on there, because they have fallen below our lower end levels. Again, I think a lot of things we need to pay attention to where the market's not acting the way it was anticipated into year end. Plenty of time to respond, but I want to look at these signs and really see how they shape up this week, because they started last week. Whatever that was that started last week, it started. And so we'll get into that tomorrow. And we'll talk about, I'll talk about Tesla. Yeah, look at really that last one. This will be our leeway. This is like the third time I said last one, but someone brought this up because we see a lot of stuff like this, and this is why you want to come back, stick with your patterns. Here's Tesla, but go to the hourly. This will be for tomorrow. All right. There's a great opportunity, folks. There's a beautiful type 1 trade. So we'll segue in tomorrow. There's Tesla, beautiful Gartley, but down at the hop, but we just got the confirmation. So there's something I'll leave you folks with, and we'll come back tomorrow. This now should trigger for go to target 1. I would love to see some patterns like this in crypto. That's my point. I don't see them yet. We don't have patterns on hourlies or 4 hours yet. Maybe by tomorrow, but we need some time. All right, that's it. Thanks again, everybody. Get back to me on the best place to catch me, folks. Go to the Discord, please. Go to basic membership. Join the Discord. It's been a lot easier for me than emails to respond to questions. So if you have anything, get there and then follow up. Until then, we'll see you tomorrow.